When it comes down to choosing a time frame to trade on, I feel like people spend too much time worrying about this, thinking that the time frame you're trading on is the key thing when it comes down to trading. In reality, it's quite the opposite. What you need to focus on is the setup compared to the time frame you're trading on. So what I'm going to be doing is I'm going to be breaking down time frames in depth, what I use different time frames for, and kind of give you guys a really good understanding of what we do with these specific time frames. So let's hop on the chart. So guys, when it comes down to it, a lot of people they're always asking, what's the best time frame to trade on? Now, as you guys can see, I have all these different time frames up here, from the 3-month, the quarterly time frame, the monthly, the weekly, the 3-day, 2-day, 1-day, 12-hour, 8-hour, 6, 4, 3, 2, 1. I have a 50-minute time frame, a 45-minute time frame, a 35-minute time frame, 30, 25, 20, 15, 10, 6, 5, 4, 3, 2, 1. And you might think, what the hell are you looking at on a 45-minute time frame? I'll tell you guys this, some of the nastiest candles I've ever found have been on these time frames that aren't the regular monthly, weekly, daily, 4-hour, 1 hour, 30, 15, 5, 1 minute time frame. So when it comes down to it, the things that you guys have to understand about time frames is price doesn't know time and time doesn't know price. Now, what does that mean? It means the fact that trading is all about fractals. You can see something in one way and in multiple ways. Now, I have these two measured moves kind of marked out here and here. So what I want y'all to take away from those two measured moves is on these time frames, we can see that there is a lot of momentum, probably news catalysts, whatever, CPI, GBP, whatever the news may be, USD news. But we have about two equivalent size moves of roughly 300 plus pips. Now, what I want y'all to understand is when you're trading, looking at a higher time frame perspective is good in multiple different variations. Now, why is it important to look at all the different time frames when it comes down to how to choose the right time frame? Choosing the right time frame just consists of understanding the bigger picture. Let's start off with this. On this specific time frame, we see the lowest low on GBP USD was put in 1985. 1985. That's probably 15 years well before you were ever born, right? For the majority of y'all watching this video. Some of y'all might have been alive during that time. And if that's the case, crazy. Regardless of that, what do we see? We see on a monthly, quarterly standpoint, we took out this 1985 low and now we're pushing price higher. Let's go to a monthly time frame. Monthly time frame, we have a big rejection wick, right? Let's go down to the weekly time frame. Weekly time frame, seeing that a little bit better. We're seeing the momentum kick in. And then what else are we seeing? We're seeing breaks of structure happening very quick right after that move. Amazing. Let's go to the 3-day. 3-day, now we're starting to see some order flow. We're starting to see some mitigation, some flow. We're starting to see moves kind of start playing out. Let's go to the 2-day, see it a little bit better. Now we go to the 1-day time frame, the daily time frame. Now we see these moves a little bit better. We're starting to see the waves. We're starting to understand things a little bit more in depth. And then we start scaling down 12-hour, 8-hour. What I want you to think about when it comes down to time frames is like looking at Google Maps, for instance. Think about looking at the time frames as looking at, let's say, the country you live in. For me, obviously, I live in the United States. So what I'm going to do is I'm going to share my screen with you guys. And I want to put this into perspective for y'all in the sense of looking at the charts like looking at the states. Think about this. Here's the USA, right? No matter where you are in the world, here's the USA. Think about looking at the USA in this picture as a monthly time frame. Still the same USA. I'm just looking at the overall bigger picture. Now, let's say I zoom in on Texas specifically. This is Texas right here. And we could say that zooming in on Texas. All right, so here's Texas specifically. Now you see Texas specific. Think of this as maybe looking at it in a weekly perspective. Now, let's say it's still the same country, it's still the same USA, but now I zoomed in a little bit. Same way you zoom in on your candlesticks. Put it into perspective. When you're zooming in on your candlesticks, what I want you to factor in is time-wise. If I'm zooming in on the candlesticks, if the daily is Texas, well, when I'm looking at it, all I see is these candlesticks here. I don't see the noise. I don't see the cities. I don't see the town. I only see, a handful of candlesticks. When I zoom in, let's say to the 4 hour, now I see a lot more noise. Now I see all the towns and all the highways and all the streets, right? Let's bring it in. Let's say here, I'm looking at Texas on the daily. Let's say I want to zoom into Dallas specifically. Here's Dallas. This is where I live, here in Dallas. Perfect. Now this is like looking at it on the 4 hour. It's still the same Texas. Now I just see more noise. I'm seeing more data. You in trading, you want to look for more data. Now let's say I'm looking at the 1 hour. It's still the same move, same bullish move, pull back, another bullish move. But now I see all the candlesticks. I see all the wicks. I see all the noise. Same thing when I look at Google Maps, guys. Same thing, family. Now I'm zooming into Dallas. Let's say I zoom into my neighborhood specifically. Here's my neighborhood. Now I see all the intersections. Now I see all the little streets. I can zoom in more. I can see all the restaurants. Still the same Texas, but I'm just zooming in so I can see more information. I can see more data. I can see the wicks. I can see the streets. It's more noise. I can hear more noise. I can see more noise. Does that make sense? So when it comes down to it, understanding the time frames to trade is just like understanding the bigger picture in the sense of that Google Maps example. I hope you guys like that example. If you like that example, let me know in the comment section below that made sense. But when it comes down to you understanding the best time frames to trade, what I would say to stick to is it just depends on your style. Are you swing trading? Or are you intraday trading? If you're swing trading, I would go 1 hour and above. Look for 1 hour, 4 hour, 2, 3, 4, 6, 12 daily order blocks and play off of those. You want an intraday trade, I would say go 1 hour and below. The 30-minute time frame, the 15-minute time frame, the 10, the 5, all these time frames below are solid. So you got to figure out what time frames are you trading. Hey, maybe you like trading New York session. Cool. Well, scale on into the lower time frame and look at what's happening within price. Like, maybe you like trading London. Let's look at these moves during London. If I'm trading London, I like to trade London on a 5 to 15-minute time frame. If I see all these lows and I see price come and liquidity grab these lows, and then this is the lower high that put in this lower low, we have a break of structure on that next pullback, I'd be looking to look for an entry and go higher for the rest of London session. So when it comes down to it, knowing the perfect time frame consists of two things. First, you got to understand your strategy. Maybe you're just trading a higher time frame strategy. I've given you guys, or a higher time frame you want to swing trade. I've given you guys strategies that consist of understanding the fib and the retracement levels, and they give you phenomenal trades. So you can use something like that. Maybe you want to trade a higher time frame and you are like, trading off of imbalances, whatever the case is. You have a good understanding of how to do that at this point if you've been studying these videos. In regards to it, guys, understanding the best time frame to trade on is going to be based on your strategy. So number one, figure out if you're a swing trader or if you're an intraday trader. Cool. Number two, you got to figure out the currency pairs you're trading. You need to do some homework. You need to understand if I'm trading NAS 100 during New York session, I should definitely be looking at lower time frames because it moves so fast. If I'm trading something like Euro GBP that moves slow, I should be focused on that maybe during London session. You got to correlate timing in the sense of sessions with timing in the sense of candlestick, time frames. So the best thing I can say when it comes down to timing, guys, and how to choose the right time frame to trade is first understand who you are as a trader, and then secondly, figure out what pairs you want to trade, and then from there, just start back testing and build a plan. With that being said, guys, I appreciate y'all. All right, guys, so we just went over in depth how to use different time frames for very specific things. I appreciate y'all watching this video. Go ahead and join the Discord. It's the first link below. It's 100% free to join. We have a free community within the Discord along with the premium side of the Discord as well. But we're going live Sundays and Tuesdays with free live trading for all the students in the Discord. Feel free to join, and we'll see you guys there on the Sunday night and the Tuesday morning trading calls. Peace.